Today, we're diving into the exciting world of real estate investing. If you've ever dreamed of building a profitable portfolio, you're in the right place. Whether you're a beginner or looking to expand your current investments, we've got you covered. So, let's get started. Number 1. Understanding real estate investing. Real estate investing is a powerful wealth-building tool because it allows investors to leverage assets, benefiting from both property appreciation and rental income. Property values tend to increase over time, providing potential for substantial returns on investment. Additionally, rental income generates a steady cash flow, creating passive income streams that can supplement your regular earnings or even replace them over time. Moreover, real estate investing offers various tax advantages. Investors can deduct mortgage interest, property taxes, insurance, and other expenses, reducing their taxable income. Depreciation benefits further enhance tax advantages, allowing investors to offset taxable income from other sources. Understanding these dynamics and knowing how to navigate the tax code can significantly impact your overall profitability as a real estate investor. With a clear understanding of real estate investing's fundamentals, you'll be better equipped to make informed decisions, avoid common pitfalls, and build a successful and profitable portfolio. Now, let's delve into the crucial steps to help you embark on your real estate investment journey. Number 2. Assessing your financial situation. Assessing your financial situation is a fundamental step in real estate investing. It requires a thorough evaluation of your current financial standing, including your income, expenses, debts, and savings. By creating a detailed budget and understanding your cash flow, you'll gain clarity on how much capital you can allocate to real estate investments without compromising your financial stability. Moreover, consider establishing an emergency fund to cover unforeseen expenses related to your properties. Real estate investing involves various costs, such as property maintenance, repairs, and vacancies. So having a safety net is essential for a sustainable investment strategy. Additionally, it's crucial to evaluate your risk tolerance. Real estate investing, like any investment, carries inherent risks. Understanding how much risk you're comfortable with will influence the types of properties and investment strategies you pursue. By carefully assessing your financial situation, setting realistic investment goals, and aligning your decisions with your risk tolerance, you'll position yourself for long-term success in the dynamic world of real estate investing. So, take the time to thoroughly evaluate your finances and make informed choices that will lead you toward building a lucrative and sustainable real estate portfolio. Number 3. Location. Indeed, location is a timeless mantra in real estate investing. The geographic area where you invest can make or break the success of your investment. A strategic location can significantly impact rental demand, property appreciation, and overall profitability. Areas experiencing robust job growth are attractive to potential tenants, as they seek convenient access to employment opportunities. Proximity to reputable schools is another critical factor, as families prioritize their children's education when choosing a place to live. Infrastructure development, such as new roads, public transportation, and community amenities, enhances the desirability of an area. As the neighborhood evolves and improves, so does the value of your investment. Moreover, consider the potential for future appreciation. Research historical trends and consult with local experts to identify areas with a track record of steady appreciation. By selecting properties in prime location, you position yourself to attract high-quality tenants and experience long-term appreciation, creating a solid foundation for a profitable real estate portfolio. So, invest time in market research and due diligence to pinpoint the best location that align with your investment objectives. Number 4. Mitigating risks. mitigating risks is a critical aspect of successful real estate investing. While real estate can be rewarding, it's essential to recognize and prepare for potential pitfalls. Firstly, understanding local laws and regulations is paramount. Different areas have varying zoning laws, rental regulations, and property taxes. Staying compliant with these legal requirements not only prevents costly fines, but also ensures a smooth and legal operation of your investment. Secondly, create contingency plans for unexpected expenses. Properties may face repairs, vacancies, or economic downturns, affecting your cash flow. Having a reserve fund to cover these unforeseen costs helps safeguard your investment and prevents financial strain. Additionally, consider landlord insurance to protect against liabilities like property damage, injuries, or legal disputes with tenants. Insurance coverage can provide peace of mind, shielding you from significant financial losses. Furthermore, thorough tenant screening is vital to minimize the risk of problematic renters. Conduct background checks, verify income, and speak with previous landlords to ensure you select responsible and reliable tenants. Lastly, diversify your real estate portfolio to spread risk across different properties or markets. A diversified approach can cushion the impact of a downturn in a particular area. By being proactive and implementing risk mitigating strategies, you can navigate the complexities of real estate investing with confidence and build a resilient and successful portfolio over time. Remember, knowledge and preparedness are your most potent weapons against potential risks in the world of real estate. Number 5. Scaling your portfolio. Scaling your real estate portfolio is an exciting milestone for investors. As you accumulate experience and financial stability, it's essential to capitalize on your success and continue building your wealth. One effective strategy for scaling your portfolio is to reinvest profits from your existing properties. Rather than pocketing the earnings, consider reinvesting them into new investment opportunities. This approach can accelerate your portfolio growth and compound your returns over time. Another valuable tool in scaling your real estate holdings is utilizing a 1031 exchange. This or sanctioned provision allows you to defer capital gains taxes by exchanging one investment property for another of equal or higher value. By deferring taxes, you can leverage more capital to acquire more valuable properties, fostering exponential portfolio growth. Additionally, consider diversifying your portfolio by exploring different types of real estate assets. You might venture into commercial properties, residential complexes, or even real estate development projects. Diversification can minimize risk while opening up new avenues for potential returns. Finally, as your portfolio expands, don't forget the importance of optimizing property management. Efficient management ensures that your investments perform at their best and that tenants remain satisfied. You can consider hiring a property management company to handle day-to-day operations, freeing up your time to focus on further growing your portfolio. Remember, scaling your real estate portfolio requires careful planning and continuous learning. Stay updated on market trends, network with other investors, and adapt your strategies to changing conditions. With dedication and a long-term vision, you can achieve substantial financial success and create a robust and diverse real estate investment portfolio. Real estate investing is both exciting and rewarding, but remember, it requires dedication, patience, and continuous learning. Always stay informed about market trends and adapt your strategies accordingly. If you enjoyed this video, give us a thumbs up and subscribe to our channel for more valuable content on real estate investing and financial freedom. Thanks for watching, and see you next time.